Good morning, good morning. How you guys doing? Thanks for joining me again for another day. A lot is happening. A lot is happening. A lot of news is coming out. A lot of different stories, a lot of different headlines. So we're gonna make sense of these markets and ignore all the mumbo jumbo that's out there. Give you a sense of calm, at least try to bring you a sense of calm in these very volatile markets. Yesterday we were taking a look at gold. We went in depth. I wanted to actually go through the currencies too, but we just managed to focus too much attention on gold. We never got into the currencies, but that's okay. So today I just wanted to go over briefly the markets and take a look at what's going on and see what's taking place right now, what's the current situation, just the overall markets. We're going to look at the indexes, we're going to look at bonds, we're going to look at rates, okay? We're going to look at some headlines and just try to determine, get a feel for what's going on. In the Telegram channel, I just posted an article, a link from an article that I thought was very interesting. Very interesting. Where's that article? Well, anyways, it's in the Telegram channel. Larry Fink, our buddy Larry Fink. The latest news from Larry Fink. See if I can bring it up. Here you go. Let me just shrink me down like that. How about that? There we go. I found this very interesting. BlackRock CEO Larry Fink says further 20% market drop is possible. Yeah, you would think that. You would think that. You know, the interesting thing is that when we look at what's actually happening here with the markets, the fact that it's dropped about 20%, smack dab right inside of a nice, healthy institutional buying zone, okay? We like to, when we do our analysis, we like to look at the facts, not hearsay, not thoughts, not opinions based on no real evidence or no real logic. We like to look at the facts. And one thing we can see here is that this is, in actual fact, a major institutional buying zone that we have here, okay? The last time price was here, there was significant buying. Okay, the last time price was at this level, there was significant buying by the institutions. And they shot price up about 20% since then. All right, now price has dropped 20% back down to this area. So one thing we know to be true is that when prices drop down to institutional buying zones, what typically happens, depending on the circumstances, but what typically happens is we'll see them coming in and buying again. All right, this is what typically happens. Now, could there be something else that's about to happen? Sure, but we'd have to see proof of that. I'm not going to speculate and say that there's going to be another 20% drop because if I'm talking to you in a respectful manner, knowing what I know, I couldn't in good taste even begin to suggest that there could be a 20% drop in the markets, because I would need to actually see evidence to support that this zone is about to break, okay, or is breaking or has broken. If I see that, then I will tell you that there's a good chance that this market could drop another, well, I'd have to do the calculations and see how far away the next demand zone is, but it's not until that would happen that I would be able to even tell you that there's a chance of a bigger drop, okay? Right now, what the chances are is that there's going to be a significant rally. Anybody who knows what's really going on in the markets and who's going to be honest with you would tell you that the chances of the next move being upwards are extremely high. Okay, so that's the first thing you should know. So don't worry about what anybody else is telling you. Okay, don't worry about what anybody else is telling you. These are the facts when it comes to the S&P 500. So if we take a look at the Nasdaq, we're in the same situation with the Nasdaq. Okay, we've got demand that's in play. You can see it here. I've had this demand zone drawn since 2023. It's not something that I just drew because price is reacting to this area. That's not what's going on. This zone has existed since 2023. So we're in an institutional buying zone. Now remember, what's an institutional buying zone? It's an area where the banks came in, set their algorithms to buy the market at a certain price, and when price retraced to it, the algorithms continued to buy. So do we know for a fact that the algorithms are going to continue to buy now? No, we don't. But what we do know, if you study historical charts, and this is what we do at the school, this is what makes us very different from most other education providers out there, is we're actually taking a look at what really drives the market, which is institutional buying and selling. All right. And we study historical charts to look at how price reacts when it comes down into historical buying and selling zones. And then we look at context. We have to understand context. You know, not every time a monthly demand zone comes into play does price go up. So what's the circumstances that the market has to be in based on all the different time frames that we study for it to go higher? So then we start to understand the odds of things happening, okay? So this is something that's important to understand, extremely important to understand. All right, so the Nasdaq is looking really good in terms of that. And we look at the Dow Jones. The Dow Jones is one that's showing us something different, okay? As you can see, we had a demand zone back here, and price has penetrated through that. So it's looking weaker than the S&P and the Nasdaq. But what I've found is that you will typically have one index leading the other two. All right. So what do I mean by that? Well, here's a perfect example of that. If I open up the weekly chart of the Dow Jones, I can show you that back here we had an institutional area of supply being created, okay? And that was back in March. Price dropped, then it retraced up to this institutional area of supply, and look what happened from there. It is the exact spot that price dropped from. And the interesting thing is that when price rallied up and contacted this supply, if you took a look at the Nasdaq and the S&P 500, you'd see that sure, there was a slight rally up in price, but it didn't rally up and contact any institutional supply. So the supply that came into play here was the one that dictated the drop that eventually was mimicked by the S&P and the Nasdaq. Okay, so that's something important to recognize, very important. So that means, and this is not just the first time this has happened. This has happened many, many, many times. And so I take this, what I know to be true, and I come to a conclusion about it. And that conclusion is that one market can lead the other. And so if I have to look at the odds of something happening, and I see that the S&P is in demand, and I see that the Nasdaq is in demand, I got two markets versus one. What's likely going to happen? The odds suggest that we are going to see a move to the upside on the Nasdaq and on the S&P, and that the Dow Jones will just follow suit. Okay? Do I know this for a fact? No, I don't. But odds suggest that this is likely what's going to happen. So this is what I'm watching for. Okay? This is what I suspect is going to happen. The Russell, it's coming down. It's about to contact some higher time frame demand that has previously been contacted before. So looking a little bit different. The dynamics on this chart is different than what we're seeing on the other ones. Okay. All right. So now we take a look at bonds. And we see that they are dropping, and they have been dropping for the last several days. Okay, and you might be asking yourself, why is this happening? Well, there's a lot of explanations out there, but let's take a look at the US 10-year, for instance. Okay, one thing that I've come to learn is that the rates, okay, if you look at a chart of the rates, they are dictated by supply and demand as well. Okay, rates going up and down are dictated by supply and demand. And, you know, maybe I'm ignorant, but I thought rates were dictated by other factors besides supply and demand. You know, maybe it's because I was listening to the news too much. Because if you take a look at what dictates, well, let's just take a look. What are the headlines saying? Let's just go to, for instance, the US 10-year. Let's look at the news. Dow S&P 500 futures falling as Treasury yields surge. Uh, ba, 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 ba. Let's see if there's a reason given for that. Barron's. U.S. stock futures were headed for losses early. Eyes are on the bond market and a sell-off in U.S. Treasuries. Dow Jones Industrial Average futures. Trump's tariffs. I guess everything is being blamed on Trump's tariffs right now. Eyes are on the bond market. Okay. Well, I don't see a good reason for that. But getting back to here, this is a monthly chart of the US 10-year. You're wondering why rates are doing what they're doing. We have a certain dynamic playing out right here. If you take a look, we had some demand created, and then we had some supply created, and the last area that was created was demand. Okay, so previously we had supply removed, demand removed, but now demand is being respected. So short-term demand, or I should say longer-term demand, is being respected. This is why we are getting this reaction from this demand zone, and we're seeing the push to the upside. Bottom line, something that is very important to understand is that we are contacting a serious area of supply, and this is what is putting pressure on the rates here. Okay, and this is why we suspect over time this demand area will be broken, and price, or not price, but the rates will continue to drop. And this is why we speculate that bonds over time are going to go higher. And if you look at the bonds chart, they are holding a really nice area of demand right down here, as you can see. So you have rates contacting major supply, and you have bonds contacting a major area of demand here. Okay, so as you can see, over time, this area has been holding extremely well, and now we're just getting a slight drop back into this area. So all these headlines, rates are collapsing and all this stuff, it sounds really bad. It sounds really bad, but if you're a large institution and you're looking to accumulate bonds, what you're looking for is sellers, right? So these headlines would work very, very nicely in order to facilitate that. So I look at things very simplistically. I look at the charts, I look at the supply and demand, and I look at the reactions to them, and I look at the multiple time frames, and I discover what's the path of least resistance. Because there's always a path of least resistance that price is going to follow. And I believe eventually what we're going to see is price head higher to the targets that we have higher up on the charts. Target 1 has already been reached, and we got targets higher up. Okay, so it's looking pretty good. It's just going to take some time for it to play out. These things don't happen quickly, especially when they're coming against very high time frame zones. Okay, so that's what we have. If there's any markets that you want to look at, please mention them in the comments section. I'll be more than happy to look at them for you. But we could go through the Magnificent Seven real quickly. We got Apple, not looking too healthy, right? Very, very nice drop. We previously mentioned this one before. Here we have it. And now we're coming back into this buying area that was used a couple times in the past to drive price higher. And now we're back here. Could we see the rally form from here? Considering that the Nasdaq is inside demand, very good chance. But I wouldn't blindly buy Apple down at these lows. I wouldn't do that. I would wait for there to be some buying coming into the market first. So I want to see proof that the banks are starting to buy, and then I'll be a buyer. Until that happens, I would prefer to sit on the sidelines. Amazon broke through demand area on the monthly time frame. So I wouldn't touch this one unless it started building a foundation, a new foundation. Because once you destroy the old foundation, price isn't going to go up unless you build a new foundation. It's like you know, common sense. It's like a house, right? You destroy a house and its foundation. You can't build a house unless you build a foundation again. All right, let's take a look, brief look at Google. Google's looking pretty nice. Look where it's at right now. It took out a demand zone back here, but it's contacting this one that had been previously tested here. Good chance that we start seeing a build-up here. Okay, very good chance. Meta, you see the same thing here. Institutional demand potential. This one's not the greatest one. When you look at the structure here, it's not the greatest looking one, which is why I wrote demand question mark, but I wouldn't be surprised if we did see a move up from there. Microsoft, it took out its demand area. This is probably the weakest looking out of the bunch. So like Amazon, it's going to have to create a new foundation. Otherwise, they're starting to build structures to the downside. So we could see a larger push to the downside on Microsoft. Nvidia, I told you it was going to drop. Okay, I posted this. I don't know where price was, somewhere up here. And I said this is going to drop. And I told you it was going to drop to the $90 area where buying would come in. I mean, you know, exactly what I said was going to happen happened. And the reason being is I'm not guessing. I'm not thinking maybe it's going to do that. I'm looking at the supply and demand dynamics of what's playing out. When the banks are creating significant selling here, and then they rally price up to that selling area and then drop it, that means they're focused on selling Nvidia. They're not focused on buying. You see the demand zone that was removed here, okay? If they were going to push price up, they would have held this demand zone. They would have pushed price up. But they didn't do that, okay? So they came in with selling, and they came in with more selling here. And so this is what dictated price action, all right? So when there's medium-term selling, where does it stop? It stops at longer-term buying. And this was what this was down here. So it's pretty simple. When you know what's taking place and you know where the zones are, it's pretty simple to determine where price is going to go to. So this is what happened. It came into the buying zone, and what did I tell you? There was going to be buying from there. Okay, and this is exactly what happens. So now we see the bullish pressure. Let's take a look at the monthly chart. You see, this is the buying zone that I talked to you about right here. We previously contacted it back here. Now we're contacting it again. Good chance that we're going to see some buying here, but I want to see on the smaller time frames, I want to see them establishing a base here at this demand zone. And if I see that, then I'm interested in buying alongside with them, but I want to see that first. So just putting things into perspective, you know, when you see the Magnificent Seven stocks coming into significant demand zones, and you see the indexes coming into significant demand zones, and there's zero proof that there's actually going to be a move to the downside of another 20%. Zero proof. Based on the realities of the market, when you have a character like Larry Fink come out and say that he suspects that the markets are going to drop another 20%, I just have a little chuckle to myself, because anybody who really knows what's going on knows that that's not the most honest thing a person can say. So so that's the situation. Tesla, I got a paper trade that I opened up here just to monitor something that I'm monitoring. It looks like price dropped back down, but here's the deal. Here's a institutional buying zone right here. It's holding by a hair, but it still is holding, okay? I suspect price is going to rally up from here, all right? I'm in a position in my account, and you know, right now it's not looking too good. I added to some shares. I added some shares to it. I posted this in the school forum. I got stopped out of those shares, but I'm still in the core of my position. I'm really waiting to see if they're going to remove this area of supply. This is the key one right here. If they remove this supply, arrivederci, baby. This is going a lot higher. That's the key one right there. So if you're a conservative trader and you don't want to get in too early, you just wait for the signal. You wait for that supply zone to be removed. Because if they're going to drop price even more, that supply is going to hold. Plain and simple. It's that simple. But if they remove it, then that means short term, they're thinking about buying off of an area that's already been established as a buy zone. So that's a very good sign for a continued move to the upside. Okay. So that's what's going on there. Let's see. I asked if you guys wanted to take a look at some charts. US CAD, Euro. US CAD, Euro, US CAD, Euro. Let's take a look at the Euro. Interesting one. Interesting one, this one. Because we contacted some supply on the monthly time frame, but this supply has been contacted several times before. So we initially got some weakness, but now we're getting some strength again. You know, I look at the US CAD, I look at across the board at the currencies, and I see that, you know, they're very difficult to determine their direction right now. So you have to go by what chart is showing you the highest odds situation. And I'd have to say US CAD is showing me the highest odds situation, which is, you know, the position that I was mentioning to you where monthly demand has been created, right? But are they going to continue pushing price higher? You know, if that monthly demand zone holds, then yes, I suspect that they're going to push price higher. But, you know, it's hard to say. US CAD, here's that monthly area here. Let me show you something. So here is a supply zone that was removed. Here is the demand zone that I mentioned to you. Okay. And we are reacting from it. Right? So based on this dynamic, I mean, look at price, contacted supply, okay, it held supply. All of a sudden, significant buying comes into play right here. This is a significant buying that was able to push price up to here. Price retraces, it's contacting demand. And there's nothing to stop price from going even higher up on the chart. So this is telling me US CAD is likely going to go higher. But if the US CAD is going to go higher, then are the other US dollar pairs going to go higher too? Well, I'm not seeing evidence with that on the US dollar Japanese yen, for instance. Look at the weakness. Remember, we contacted significant selling up here. There's a significant selling area here on the 6-month time frame. That is what's pushing price to the downside here. Significant pressure to the downside. And if I'm going to speculate in the currency markets, I like to see the currency markets correlated with each other because they typically are. If the dollar is going to drop, say US Japanese yen is going to drop, US Swiss is going to drop, US CAD is going to drop, they're typically all in line with each other. But US CAD hitting demand, US dollar Japanese yen looking to drop, they're not in line with each other. And I don't like situations like that. Look at the US Swiss dropping even further. It's about to break, at least it looks like it, through this area of demand here on the monthly time frame. So this is looking like weakness, because right now I'm seeing two currencies showing me weakness, US CAD or US Swiss and US Japanese yen. Okay, so let's look at the dollar index. Okay, so far some weakness, nothing to stop price from dropping. We got supply holding here, big move to the downside. Look at this, big move since the basing up here, and there's no demand until lower down the chart. So potentially the Dixie, the US Swiss, US Japanese yen showing signs of weakness versus one US CAD that has demand in play. So it's if I had a slight bias, I'd have to say weakness on the dollars. All right, so that tells me that euro US dollar probably going to go higher. But as a supply and demand trader, looking at the euro US dollar contacting some supply, to speculate that it's going to go higher when supply is in play is a very difficult thing to do because you have to respect the zones. Unless supply is removed, I'm not going to commit myself to a move to the upside on the euro. Okay, I need to see proof. I'm not just going to speculate. Oh, three pairs are showing me weakness, so or three assets are showing me weakness, so I'm just going to go long euro, or speculate that the euro is going to go higher. I need to see proof. When we look at the euro daily chart, we're not seeing an uptrend being formed here. Yeah, structure is being built to the upside, but there's not an uptrend. This is not an institutional uptrend that's being created. All right, so there's really no strong indication that there's going to be a move to the upside here. There's no strong indication that there's going to be a move to the upside here either. Okay, on the weekly time frame, yeah, we got a pretty good idea of what's going on. A significant supply area has been removed, so that opened up the chart for a move higher for sure. But to where? To the opposing area of supply, which we've now contacted. So that move's already been played out. So now what? So this is a tough situation in these markets. I would not be trading this asset because it's just not presenting a high probability at this point. Okay, this is my thoughts. I'll only trade something if it's high probability. And if it's the currency market not providing me the high probability, I'll trade other markets. I don't care where I get my percentage returns from, as long as I'm getting percentage returns. I want to invest my money and I want to make money. I want to make my money back. I want to make some profits and I want to make them quick. It doesn't have to be today or tomorrow, but I want to plant those seeds and I want to harvest something soon. And so if I don't see, this is like a farmer looking at soil and the soil's tainted and nothing's been growing there lately. And there's no high odds that you plant seeds there, you're going to get anything in return. Is he going to plant seeds there? Likely not. What's the incentive to do it when there's other fields that he can plant and he knows that it's providing a good crop? What's the incentive? because he likes that plot of land. No, a farmer wouldn't think that way. So don't get too hung up on trading any type of pairs, because even if you like them, okay, just do the right thing and uh, trade where the high odds are. Let's take a look at Bitcoin. I've been telling you weakness is coming into play. I told you to watch this area here. This is a daily area of demand. Once that breaks through, that opens up the gate for a move down here to the 70 area. I took a look at what Michael Saylor's average price was for Bitcoin, and we're coming down to that. He's lucky. He's very lucky that when we come down to his average price, there is a significant area here of institutional buying, okay? This area here, where I suspect we're going to see a big push to the upside take place. So he's very lucky about that, because if there wasn't an institutional buying area there, price could just continue to drop even further, and cost of the price of Bitcoin would drop below his average price. Um, so that's the situation. It's looking pretty good that it's going to continue dropping. Let's look at his stock. I was actually looking at it yesterday. Yeah. Well, I told you back here. I told you it was going to drop. I told you it was going to drop because the supply and demand dynamics was suggesting that. Everything was all up and to the upside. You looked at the media reports and they were all for MSTR. Buy. This is a great stock. Look how much it moved. All that stuff. And then I saw the big institutions were selling it. I was like, oh, that's funny. You're telling everybody to buy, but you're selling. And then they retraced price up to that selling area, and then they sold again. So, they played a little bit of a bait and switch situation here, where they had supply, they dropped it. Okay, here was the supply that came in. They rallied price up to supply, they dropped it, and then they temporarily removed that supply, and then came in with new supply, and then rallied price up to that supply and dropped price. So we have some demand here that's been contacted several times. One, two, here's the third time. What we know to be true with supply and demand dynamics is that when a zone uh, gets contacted 3 times, it typically breaks. Only under the circumstances of a distribution taking place. If there's an accumulation, and we would see signs of an accumulation taking place. If there was an accumulation taking place here, what would typically happen is price would rally up and break through supply and head higher. But I believe there's a distribution here of this stock here. So if this area breaks right here, if this area breaks, this stock's in trouble, because it'll easily drop down to the 160s and below, between $100 and $160. Easy. All right, so watch for that. What are the chances of that? Pretty good. I just showed you Bitcoin. I just showed you that very key daily area of demand that needed to hold if there was going to be more upside, and it just broke. So that's your small little piece of evidence there, small little clue that will tell you that the odds of a drop here are pretty big. All right, folks, was that pretty good? How long did we go today? 34 minutes? That's not too bad. I hope you got something out of that. I hope you feel a little bit more calm, secure in what's taking place in the markets. And just remember, don't let the media freak you out. Don't let anybody get to you. Stay strong in your convictions. Do your analysis. Know what's going on. Be strong in your understanding and in your knowledge. And if you don't feel strong in your knowledge and in your understanding, then we're here to help you out. We're having a new class starting April 14th, Bank Trading Masterclass. We're going to teach you all the fundamentals of what you need to understand these markets. and to give you a good foundation of how the banks move markets around, their buying, their selling zones, their trend lines. So if you want to join us, great. We'd love to have you, and we look forward to that. All right, guys, enjoy the rest of your day. You take care. It was a pleasure. Have a good one.